From Shreyas to KL to Rishabh to Shikhar, even Indian cricketers can't stop raving about the many benefits of mutual funds. But like Sachin Paji warns us in the ad, ये mutual funds है, magic funds नहीं. What Sachin Paji means is this: before you plunge headlong into a mutual fund, pay attention to what kind of fund it is, what kind of returns you can expect, the risk it carries, whether or not it suits your goal. But first, let's understand the basic categories of mutual funds: open-ended and close-ended mutual funds. You may have heard these terms tossed around and wondered what they're all about. It's pretty simple actually. Both open-ended and close-ended mutual funds comprise various stocks and bonds and are operated by asset management companies. You can buy and sell an open-ended mutual fund at any time. If you have bought into an open-ended mutual fund scheme but are faced with an urgent financial need, you can freely sell your unit holdings back to the asset manager. Just place a sell request and redeem your holdings at their end-of-day value. Since open-ended funds are traded once at the end of the trading day, they offer no intraday trading. At the end of each trading day, the net asset value, which is NAV, is calculated by dividing the market value of the fund's assets by the number of shares held by investors. The biggest advantages of an open-ended mutual fund are flexibility and liquidity. Matlab, get your money whenever you want. Also, open-ended funds are terrific SIP instruments. A close-ended mutual fund is a different beast. You can enter a close-ended fund only during the NFO, which is the new fund offer period. Once the NFO is over, the fund is locked and you cannot buy units from or sell units back to the fund manager. And no new investor can enter either. Most Indian close-ended funds come with the tenures of 3 to 5 years and you can redeem your units only once it matures. But what if you need cash urgently and your money is stuck in a close-ended fund? Thankfully, SEBI guidelines allow you to trade your close-ended fund units like stocks on the exchange market, provided you have a demat account. You can offload your holdings to other buyers at the going market rate. Although the value of a close-ended mutual fund is theoretically linked to its NAV, its actual trading price is determined by demand and supply. As you can see, while open-ended funds offer more flexibility, close-ended funds come with a definite maturity period. Which one do you like better?
Investments in security markets are subject to market risks. Read all scheme-related documents carefully.